8 p.m. meeting. Hello, everybody. We're about to dive into an exciting topic of 2026 profit playbook, planning 2026 and things like that, and how to save on supplies and maximize tax efficiency. So this is going to be an exciting conversation, and we're just going to give a little bit of time for everybody to join. I really wanted to have this discussion earlier, but this was the earliest we could coordinate. It's still before the end of the year. And it's very important, I think, for people to start planning 2026. And I can't stress enough that taking a day off of the calendar or taking a couple of days off of the busy calendar to just sit down and plan is going to be crucial. That's where I wanted to invite my friend Drew from Engage Advisors to talk through not just the supplies, or we'll talk a little bit about equipment, but also planning from a tax standpoint and just making sure that you guys taking all the advantages before the year end. And so, Drew, what do you think? Are we ready to start?
Sounds great. Sounds great to me. Let's rock and roll.
Let's rock and roll. Let's go. All right. So for everybody joining, this is going to be a 30-minute presentation. So Drew and I will try to package as much as possible into maybe even 20 to 25 minutes. And then after that, we'll open up for Q&As. You guys are more than welcome to use the chat on the right side. There will be 2 poll questions, and then the handouts are going to be available as well. So let me just check. We can add the handouts at the end of the call. So if anybody needs a recording of this webinar, or anybody needs the handouts, just put it in the comments or email us at the end, and we'll be able to share that information with you. So with that being said, let's dive in. And actually, if anybody's like really watching, like Andrea, can you tell us if you can see the screen, and if everything is good? Just go in the chat and say, all right, Michelle, I can see that you'd like to have a copy, but somebody can comment and say that you can see the screen. Just a very quick video check. All right, fantastic. Thanks everybody. All right, so does this practice look like yours? Again, I like to start with the scary images because I've seen a lot throughout my career in dentistry. The worst thing is expired products, because that's thousands, literally thousands of dollars in the garbage. And so that's really not a pleasant situation to be in when you have expired products. Hopefully that's also not one of your offices. This is one of the practices that I visited back in the days when all of the supplies were in the basement, and you have to go through a flight of stairs to go up and down to bring the supplies, and we'll talk about that. And again, I really hope that's not one of your practices. We'll talk about the basements. Also, when you see a clutter throughout the practice, you can see it right here on the countertop. There's just so much going on, and it's not the best way to organize the practice. Again, we'll talk a little bit about that. If you're using tags, the good old school tags, we should probably do a poll if like you're using the tag system or not. And then Drew provided some of the pictures. Like if this is your office, like with taxes and expenses and receipts, that sounds a little scary. Or if you're looking like this at the numbers and nobody can tell you what exactly you did throughout the year, or I don't know, Drew, like what's the worst case scenario when people look at the tax returns or P&Ls and they're either not asking questions or asking questions? Like, what would you say?
Yeah, if they're not asking questions, and you're missing out on a big opportunity to make improvements, right? Like what we're here talking about today.
Yeah. And so that's pretty scary. And then obviously that screen is very exciting to me because I see a lot of offices ordering supplies with sticky notes and just putting them on the screen, hoping that they will arrive on time. And so in this short presentation, what Drew and I will try to do is, obviously, I'll take the lead on how to get you to 4% off the collections or less spending on dental supplies, strategies to eliminate the overspending and the vendor overcharges. And then Drew will take the lead on tax deductions practices that typically forget, smart purchasing strategies, and how operational efficiency and tax planning work together to benefit your practice. So with that being said, both of us are presenters today. So Drew has a 10-year experience working with dentists from a tax standpoint, and he's been leading the Engage Advisors for the last 10 years. Drew, did I miss anything?
No, that's great. Thank you.
All right, awesome. So, and then from my standpoint, I've been running Zen for the last 10 years, and I visited a bunch of dental practices, close to 350 right now. And my goal was always to look at the efficiencies and operational side of things. And so poll number 1, let me get started on that. So let's go. have you started planning 2026? So just head out to the polls and let's go to these polls. And hopefully you guys can answer some of these questions so we can see. Drew and I are really curious. Have you started planning 2026? That means supplies, equipment, staff, anything like that that goes into the 2026 big decisions, small decisions. Tell us where you at. 4 answers so far, 5 answers.
I will tell
All
you,
right,
our
so
clients are going to say yes, Tiger. So,
all right, that's fantastic. My
or they
clients are going to
should
say
anyway.
yes for sure. Yeah. All right, let's see. Well, we're not looking for outliers. We're just trying to see. And if you haven't, I think you still have a little bit of time. That's why we started this webinar on a December 16th, not December 31st. So I would highly recommend that you guys take the time. So we got 7 answers, and majority of the people started the planning. That's amazing. So let's start with supplies. And again, use the chat, guys, if you want to drop questions, but let's start with supplies. So supply cost reduction always starts with supplies. And I believe that's the simplest and the easiest thing and any office can do, like, pretty quickly. It's not rocket science. I always tell my offices, it's not something that you have to plan for, organize your team for. It's literally simple. Like, anybody who wants to start saving money on supplies can do it tomorrow. And some of the strategies will include the budget controls, having the right systems in place, and using the software like Zen. But let's start with industry benchmarks. So what we typically recommend is 4% of the last month collections, not the productions, it's the collections. And we will talk about why the 4% is achievable and what happens if your office is 6 to 10%. That's probably more on the Drew side. So Drew will explain how bad it is if your practice is 6 to 10% on supplies and what actually affects what areas of the business would those numbers affect. But from our perspective, I'm going to focus on how to get you guys to 4% in no time. So the biggest causes of overspend, I would say the number one is lack of budget. So most of the people that we start working with during the demo call or during the sign up call will say that they don't have a budget. So that's the number one thing that we're going to fix. And I will give you guys the simple formula. Second one is lack of systems. Third is emergency ordering. So once we implement the systems, and our recommendation, we'll talk about it, is every other Tuesday, twice a month, and then you start doing emergency orders, that's a no good. So that's another sign of the overspend. And then I would say the fourth one, which is the one of the hardest for doctors to make, is staff is making decisions on the product. So do we use Gucci gloves, like one of my friends likes to say, or do we use the normal gloves that are working for the entire office? And so these are the things that we will look at. So let's start with the budget. 95% of dental practices don't have a budget or don't have the tools to track the spendings. So a lot of times people will go to their accountants, people like Drew, and say, where should I be? Or for example, in Drew's case, I think you guys are very, very proactive to tell the customers that they are overspending on supplies, and you will give them the benchmarks, but they don't have the tool to track. They don't have a way to say, all right, if this order goes through, or if I do a call to a supplier X, Y, and Z, how would that affect my budget? And so these are some of the things that we'll cover. Now, the simple formula, let's just dive into it. You look at the last month collections, you multiply by 4%. That's where you should be as far as the supply budget. It's as simple as that. Now let's talk about how we're going to track it. And by the way, what's not included is office supplies, lab supplies, implants, Invisalign, CAD/CAM, and instruments. These are the things that I typically like to separate from the office supplies. And we'll talk about the why would that be important. And Drew will address especially the equipment side of things. I see a lot of times, and I have a slide on that, people bundles into supplies their repairs, their equipment, their service. Everything goes into one category, and that's not good from your tax standpoint. So what we like to see in the supplies is just the dental supplies, your day-to-day items that you use, the office supplies, lab supplies, implant, Invisalign, CAD/CAM instruments, they're separate. So the next step is how to order supplies, right? So we talk about implementing spreadsheets, but I mean, I can't just offer you to implement a spreadsheet when there's a tool like Zen that's out there that it's so easy to use. So it's literally a spreadsheet on steroids. We also recommend to use the orders on a bi-weekly basis, and the Tuesday is the best day to order. So for all of the practices we work with, we always say Tuesday, right after the morning huddle, you block in your calendar 30 minutes for your team, and then that's either going to fall into the day that you're placing an order, or it's going to fall into the day the following week when you're not placing the order if you're doing bi-weekly. that means that day your dental assistant is just going to go through and do the inventory check. And so it's 1 week we're doing inventory check, next week we're ordering. 1 week we're doing inventory check, next week we're ordering. The next step is a little controversial, is no free goods. I don't like free goods. I tell all of our offices not to fall for free goods. If you're buying supplies and your main decision-making process is off of bulk orders and free goods, that's not what we recommend. We're kind of actually against it, because that really pushes you out of the budget. And a lot of times I tell my offices that I'd rather you buy a very limited amount of supplies from the most expensive supplier than try to chase deals and free goods with the cheapest supplier out there, because you're going to end up spending more. Orders over the budget must be approved by the doctor. So again, our software allows you to track that and monitor that. And the number 5 is, I actually like when our offices are bonusing their lead assistants for achieving the 4% on a rolling average. It's not like we're going to reward somebody for the last month 4%, but on a quarterly basis, if we see that our dental assistant is hitting that 4% goal, why not create a bonus plan that they can actually benefit from that? So this spreadsheet that will be available for the download at the end, I will give you guys the QR codes. I would highly recommend, if you don't use a tool like Zen, use the spreadsheet, download it. You can go in and for each individual month, you can put the collections at the top. You can then list all of your vendors, and each time you place an order, you can have your dental assistant put in the number, the total number, including sales tax, shipping, delivery, all of that in the field within that month. So then it's going to add up all the numbers at the bottom. So it will show you the total. Then you're going to put, it will tell you and calculate the collection percentage. It will give you the target and did you beat the benchmark, or if you didn't beat the benchmark. And so then you will see that on a rolling average, if you're hitting the numbers, then you can start bonusing your assistant. But this simple spreadsheet could actually work to help you get your office streamlined. And so then if we go to the next step, is the one thing that I always talk about is the sales reps. And I think that's a big elephant in the room. A lot of practices have the sales reps, and I actually have a little video for you guys to watch. But with the sales reps, I would like to turn the tables around where you're not, how do I say it nicely, Drew? That you're not, that the reps don't run your practice. Let me just put it that way. Make it where you utilize the reps in I'm not saying the word use, utilize them to the benefit of your practice, not the other way around. So I've seen a lot in 10 years. I'm sure Drew have seen a lot in the last 10 years where you need to run your practice and really watch out to make sure that you guys are utilizing the reps to the best and the advantage of your practice. Actually, I think I'm going to go ahead and just skip this fun video. If you guys want to, you will see it in the handouts. But my point is how to work with supply reps. Work with them to benefit your practice, which I said before. Purchase from multiple places. Do not sign long-term contracts. A lot of companies will try to tie you up to a long contract and say, these are the things that you need to buy from us. This is the minimum and things like that. And just as a reminder, the sales rep work on a commission. I see way too many times practices will take orders and tasks from the reps and then just complete these tasks and send it back to the reps. I'll give you an example. A lot of times what I see officers do is the rep will say, well, if you find a cheaper price, just send that screenshot to me and I will price match it. Or if you're going to be buying from somebody, put all of that in a spreadsheet, send me the spreadsheet, and then I will go ahead and match it. So my question is, why are you doing the work for the sales rep? Have the sales rep come to your practice, watch what you're doing, record it, create the spreadsheet, go on their own to price match it, and then come back to you and present with options. Don't make your staff, which is right now very, very expensive, work on behalf of your sales rep. That's a big red flag. That's a big no-no. And so then the real tactics that we should talk about, this is not necessarily how to work with a sales rep, but just in general, what I would recommend to do is set the clear budget, share with your favorite rep, ask for prices in writing, watch for prices increase every 2 months, and then do not fall for, doc, focus on production. Supplies is just a small percentage of your expenses. I think Drew and I both have heard this line way too many times in the last 10 years, more than I want to hear. And so I would highly advise if the rep tells you that, run away. And then use multiple suppliers. And so now if we're just going to wrap it up a little bit, I would say another key element is reconciling the expenses. I've seen this mistake way too many times when practices, again, bundle up everything in the same expense. And so this is an example of a customer's expenses that we were running. And then I had to break it down, not just supplies, but supplies, lab, implants, instrument, handpieces, equipment, and so far and so on. So the customer reached out to us saying that they spend $18,000 on dental supplies each month. And that seemed outrageous. And so when I went back and I looked at all of the expenses and I looked at all of the bills and statements, it happened to be that it's not just the supplies, it was just categorizing correctly. So the supplies was, in this example, 1,600, but they bought a bunch of instruments that's $24.98 and 20 cents, which again, Drew will talk about. Why would we want to maybe categorize instruments a little bit differently? So things like that are very important. Watch out for that, and just to make sure that you're properly reconciling your expenses and you're putting them in the right buckets. And then just a final reminder before I turn it over to Drew is the average private practice spends 7 to 10% off of collections on supplies. So for a $1 million practice, that's roughly $50,000 that you lose per year. Like, imagine what can you do with that $50,000? And I'm just going to leave you at that. And Drew, we're going to go to the second poll, which I will start for everybody in a second. And Drew, let me do that. All right, everybody, if you don't mind, let's head out to the polls and help us see if have you met with your CPA to discuss 2026. Oh, the no's are winning for now. All right, give us more yeses. Okay, 7 total. I'm glad to see that no one says I'm not sure if I need it. So that's a
Yeah,
good
that's
sign.
very true. That's encouraging.
All right, let's start there. All right, Drew, take it over.
Yeah, thank you so much. Okay, so putting the CPA hat on for a moment to kind of talk through and translate what Tiger is talking about with the presentation thus far and Zen One's platform and how you need to work with your either use a platform like Zen One or work with your existing supply rep, but talking through the financial impact to each dental practice, to your office, specifically to your bottom line and to future values. From a financial standpoint, supply cost is one of the fastest ways to improve cash flow in a dental practice. Since it's a variable expense, the more production you do, the more you use. And so if you can bring your price overall down, that's better off for you. Ultimately, that's because it's a pure cash expense. So you're paying for it every single month. Everything that you use, you're paying for every single month in order to replenish it. So Tiger had mentioned, dental supply reps talking about focus on production. Well, unlike growth strategies, which I do agree, focusing on production as well is important. However, it's not the first step in the formula, if you will. You know, unlike growth strategies, this doesn't require new patients, right? It doesn't require expanding your chair time. It doesn't require adding additional stress on yourself or your team. So when you control supply costs, or really any other costs or expense for that matter, overhead item for that matter, but supply costs specifically, the cash shows up immediately, right? Like next month shows up next month immediately. So back to what Tiger had said, if you take that same $1 million practice or $1 million practice and you're spending, say, 8% on supplies, and you get that closer to the 4% target, that benchmark that we set and that we talked through, that's roughly $40,000 a year. And so more than $3,000 a month of additional cash flow. And so that's money that's just coming in, from discipline and systems, working smarter, not working harder in that way. Okay, so then now where it really gets interesting from our perspective as CPA and advisors for dentists is that supply savings create what I like to call high quality profit. So most practices try to make more money by producing more dentistry, by adding procedures, et cetera, which I do agree with. It's a multi-structured approach is what you need to take for improving overall profitability and cash flow. But But this is an easy one, like, right? It's a low hanging fruit, So adding additional procedures though come with additional costs, right? You have to do CE a lot of times, travel in a lot of cases. Yeah, maybe you have to add more staff, maybe you have to do more lab work, wear and tear on your equipment, and ultimately it's just leading to more stress overall for yourself and your team. So supply savings are different. Your team is already paid, your rent doesn't change, your equipment costs don't change, you have the same advertising, you have the same insurance, you have the same everything, in your fixed costs stay exactly the same. So when you say $40,000 on supplies in that prior example, all of that's going to flow directly to your bottom line. And so to put that in perspective, to generate $40,000 of new production might only leave you with call it 80% of that, maybe 85% of that after expenses. So if you say $40,000, that's 40,000 of additional profit, pure profit, rather than having to say generate $60,000 of production in order to add $40,000 in profit. So it's some of the cleanest, lowest risk dollars that are going to be available inside of your practice. So the next question that we always get is, great, but doesn't higher profit just mean higher taxes? And I mean, yes, right, but first world problems that are good to deal with, but it doesn't always have to, right? And I say that because if you have higher profit, higher cash flow, if you plan correctly, it doesn't have to mean higher taxes directly. So when supply costs are under control, it'll give us some options to work with you as our advisory clients. Those savings can be reallocated or redirected directly into retirement plans, for instance. So if you're not maximizing, say, a 401k or a profit sharing, or a cash balance plan, it'll put a pretty big chunk into that. Depreciation strategies, the big beautiful bill allowed us to, gave us back the gift of 179 for a much longer time frame. And so if you need to buy that new equipment, that new cone beam, a new implant system, a new laser, whatever it may be, all of that is, helps chip away at the overall cost of that investment into your practice. And then of course, just you can always just take the pure tax planning aspects of saying, I get 40,000 extra dollars, yes, 10,000 of that, or 15,000 of that, somewhere in that neck of the woods, is going to go to taxes. But we, through smart tax planning, we can make sure that you're not surprised at the end of the year. So what I see all the time is practices improving operations, but never really connecting those improvements to improvements in your overall tax strategy. And that's really what we like to focus on with our clients. And so the result is that they work hard to save money, and then they just give more of it away to the IRS, so they necessarily need to. They don't put more money in their pocket, increase their net worth, and build longevity. So the goal really isn't just to spend less. It's also one of our goals is to help our clients keep more of what they earn. The next overall interesting thing and is what I'll close with, and I think that's honestly one of the most overlooked benefits of reducing your overhead. When a buyer, and I work with a lot of dental buyers, a lot of dentists buying practices around the country. And so when a buyer is looking at a dental practice, they're not valuing how hard you work, how many hours you have, how many procedures you do. Sure, that's important, but that's not ultimately what they're valuing. They're valuing your practice based on the cash flow to them as the new buyer. So every dollar of sustainable cost reduction, meaning every dollar in a system that you put in place to reduce your overall costs, increases your cash flow, or EBITDA if you're talking to DSOs, right? So general term that we like to use, but cash flow, right, is what most dentists would know. And most practices sell for somewhere between, call it 3 and 6 times their EBITDA. And so if you permanently, by putting a system in place, save $40,000 a year on your supplies, you're not just improving your cash flow for, say, the next 10 years before you decide to list your practice and sell it. You're saving that money for the next decade, or 20 years or 5 years or whatever time frame. But you're also increasing the value of your practice by, somewhere between maybe 160 to $240,000, which is a huge blessing at the end of at the end of your career when you're transitioning it. So that's real wealth creation from a systems decision that you're making today. So that's why supply control isn't just an operational issue. It's a financial, it's a tax planning matter. It's a long-term value. It's the estate, that your legacy that you're passing down to your family. It's how many vacations, right, that you might be taking in retirement. And so the key takeaways that I would like to leave you guys with, one, to reiterate what Tiger said, implement a budget system. Take and say, what is my production last month? I'm going to multiply that by 4%, and that's going to be our target. And keep in mind that's a maybe you're nowhere close to being able to do that today, but let's whatever it is from last month, let's start somewhere, and then let's continue to chip away at it. Let's have a goal to maybe 6 months from now get to that 4% target, or 12 months from now get to that 4% target. Always try to make an improvement on last month, and then continue to work toward that. So another big one would be, you can really expedite that target budgeting by signing up on the Zen One ordering platform. We've seen a lot of clients really improve their overall operational efficiency and their costs big time. I think this the lowest one we've seen might be 7% savings. The biggest one we've seen was over 20%. I think it was like 22.5%. We had a client that reduced their supply overhead costs. So another key takeaway is put one person in charge of ordering, right? If everyone owns something, that really means nobody owns something. So if you put one person in charge to own it, then you could also bonus them on staying within budget. And it doesn't have to be massive or extravagant. Maybe it's a couple $100 a month. Maybe it's a spa day thrown in every now and again on top of that. Be creative. Your team, we don't know your team, but do something that you feel like is going to motivate them. Most people are coin operated in some way, shape, or form. So give them something that's going to give them some incentive to stay within budget. And then lastly, of course, speak with your CPA to ensure that you're maximizing your aggressive tax deductions, and that you're reinvesting those savings into increasing your net worth, into improving your operational aspects of your practice, using technology, lasers, AI, all that fun stuff. So with that, Tiger, I'll turn it back over to you.
These are really good points. And Drew, before we go into the questions and before we go to the slides where we're going to wrap this up, I do want to go back to what you said, that every dollar that you save is actually a dollar in your pocket. I learned it from one of our very, very successful offices in Texas. And the doctor literally, it's exactly what he said. A dollar in production is I still have to pay marketing, I still have to pay front office, back office, percentage to the associate, but the dollar saved is a dollar in my pocket. He's like, everybody's paid by now. It's in my pocket. So that's really, really important to grasp. And when I understood that concept, that was, again, it's not just a dollar saved in supplies. It's just like, it can make a lot of differences in the practice. I would also like to say and take your feedback on the simple fact that supplies, if we take this into the real life example, and if somebody says, you know what, I want to get in shape, like if you throw all the systems at the person, like go to the gym, do this, like do nutrition and go see this and take the blood work, it's a lot of work.
It is.
But if we say, you know what, just get up in the morning and I don't know, take 10 steps, right? Or drink water, like a gallon of water before you leave the house. That's a one simple step that will set you up for the next successful step, and then the next successful step. And that's how I look at supplies. It's the lowest hanging fruit. It's so easy. I think it's just the people overcomplicate stuff in their head by saying, well, but it's my rep, it's my hygienist, it's my dental assistant, my office mate, I don't have a person. No. It's really easy. It's just what you buy and what you spend. That's it. There's nothing else there. And so I do feel like supplies, it's also like that one simple step, like taking the vitamins or drinking the water. It's like something that doesn't take a lot of effort, and you can, once you do it consistently, it will set you up in a successful path. So I just want to add that as well, because it was very well said by your takeaways.
No, thanks. I appreciate it. And I always like to look, if you're trying to get to a level 10, and if you're at a level 1, you're probably not going to be able to jump to a level 10 on day 1, right? And so it's like, what do you need to do to get to a level 2? And then what do you need to do to get to a level 3? And then a level 4? Just take it a step at a time. Same
Yep.
way you eat an
All
elephant,
right.
right? To go back to your slide earlier about elephants.
What's the
Eat an
big
elephant
elephant
a
in the
bite at
room?
a time. So.
Right. All right. So we're gonna start wrapping it up. I'll leave this these QR codes here. I'm gonna start adding the handouts. And Drew, the first question that came in was, what should we budget for the peri offices? What's
Yeah, so that's a fantastic question because you're going to have your like normal disposable supplies, but then you're also going to have other things like implant parts, bone grafting materials, so on and so forth. So that goes back to it's kind of the same philosophy. I've written a book called Profit First for Dentists. That's also a fantastic cash flow methodology, like management system that makes it super easy. And the whole idea there, it's where are you at now, and let's continue to try and make it like 1% better. And then once you achieve that, let's make it 1% better. And then once you achieve that, let's make it 1% better. That's ultimately what I would shoot for. But perio, you're going to have to look at your disposable supplies and your implant parts and your surgical, bone grafting material and surgical materials, kind of in two separate camps, if you will.
And on that, Drew, what are your thoughts on? Remember how we looked at the spreadsheet? So let me go back there for a second. Um, Separating supplies and implants and instruments and equipment. Does this really make sense?
It's super helpful from a operational planning perspective, because when you look at just the one charge from Patterson as an example, and you were to say, okay, if it's what is that, probably what's that, $4,000. If you look and you say,
Hmm.
okay, we spent $4,000 at Patterson, and you think, okay, my supplies were $4,000, but in reality you had a small tool purchase there, right, of 2,500. I mean, that's more than 50% of your purchase was from a one-time purchase of whatever hand pieces or scaling instruments, whatever it may be. And so and so being able to break that apart to know where am I actually spending my money is very helpful when making decisions, when to say, are we on budget or are we out of budget? You're always going to have the need to buy new instruments, right? You're always going to have the need to do repairs and maintenance. You're always going to have the need to pay for your clearinghouse for your electronic billing, through your EagleSoft or your Dentrix or Open Dental or wherever it may be. And so making sure that you have those expenses broken apart and categorized properly, that's very important, not necessarily from a tax perspective, but it's very important from an operational decision making perspective.
And Drew, which of these categories play the role in the Section 179? Is it more on the equipment side?
It is. It would be equipment or equipment purchases over $2,500. And so, for instance, you go
Hmm.
buy a new laser or a cone beam or an implant system or whatever that may be. Instead of depreciating that over, say, 5 years, if you have the cash flow that makes sense and you're in a tax bracket that makes sense, you can accelerate that ahead of time. To take all that deduction in say 1 year. And we see it
Hmm.
all the time, by CPAs that accelerate things where it makes no sense to accelerate it as well. And so that's one of the things you have to really be cautious of, is that they're using your dollars, your depreciation dollars, in the highest and best use possible. Like, it doesn't make any sense to pay tax at say 15% this year if your next year's taxes are going to be at 35% as well. You know what I mean? So that's where one of those things, it's like, I'd rather get 3 years of 35% tax deduction than 1 year at 20% tax deduction for dollars. So
Interesting. Wonderful. Hopefully there will be more questions. So I just added the handout so I can see that people are downloading the handout. So there will be a lot of information there. Is there anything that we missed, Drew? Like, while we're waiting for some more questions, is there anything that you would like to add to the conversation?
I don't think there's anything else I'd like to add. I mean, we covered a lot of ground as it relates to budgeting and operational planning and the true dollar impact. I mean, what I find that so many dentists, who's working with a lot of doctors especially in the transition space, what I find is so many dentists go through the motion, and they do whatever it may be during their career while they're seeing patients and while they're trying to manage an office and manage team members and manage their personal life and family and so on and so forth. And then they get to that end, and then they're just shocked as to, like, oh, I thought my practice was going to be worth more. And then they realize or learn, I get to be the bearer of bad news, that they learn that, well, if I had just made a small change early on, my net worth would be five, six, $700,000 different, over the course of the next decade. So that's one of the biggest things that I can just continue to pound over the head and reiterate is like, man, make that change in order to put a great system in place. So that way it takes less work, less stress, less effort, but it's going to pay huge dividends. Like this is like one of the biggest ROI decisions that you possibly have. That
Hmm.
is just so simple to implement.
Hmm. Yeah, it's such a good point. There's another question. Other benchmark percentages you can share across other expense categories.
So it's going to depend on the different area of the country you're in and also the type of practice. For instance, an orthodontic practice is going to be different from an oral surgery, from an endodontic, from a general dentistry practice. And so what I would say is get with your CPA, and hopefully they work with enough dentists to understand what kind of benchmarking it makes sense for your particular situation in your particular market. We work with about 700 dentists nationwide of all specialty types. And so one of the things that we do for our clients is we break their profit and loss up into key categories. So that way, you can know exactly how much my personnel expense is, as an example. Single largest expense in any dental practice, doesn't matter which, what specialization you are. And then within that, we have our hygiene broken out as a group, we have our clinical assistants, our front office, and then right there on the P&L, we have our target percentages. So, for instance, a general dentistry practice, and we'll call it the Midwest, might be a 22 to 26% target for their hygiene, their clinical assistants, and their front office, right? Their production expenses, so their lab supplies plus their dental supplies plus their lab fee. Assuming they're not doing implants, lots of surgical stuff, lots of Invisalign, for instance, might be, call it, less than 12%. Maybe it's 14 to 16% if you're highly cosmetic, doing a lot of different ancillary procedures and lots of implant placements. Maybe it might be upwards of 14 to 16%. Your general and administrative, in most cases, you'd like to see it below 10%, regardless of what specialization you're in as well. And so, one of the key things that we find helpful for dentists is to have that right on the P&L, and then being grouped in such a way where you can very quickly see, like, am I in the green, the red, the black? Like, is this good, bad, or ugly? You know what I mean? To be able to see that, on an ongoing basis.
Yeah, and I would also
And
add,
if
Drew,
and
from
if anybody just by the way, and just Tiger, let me throw this out there. If anybody wants an
yeah, yeah.
example of how we structure our clients' P&Ls, so that way they can understand better, just shoot me an email to drew@engageadvisors.com, and I'm happy to send an example of what we send out. So you can set your QuickBooks up, or you can set have your CPA set theirs up, whatever it may be, in a similar fashion.
Yep, I do have a screen with emails in case you guys want to send. I would just add one more thing to that question is it also depends the stage of the practice. The bigger you grow, the lower your expenses. Your fixed expenses should stay fixed. So if you're getting to the 1.2, 1.5, 1.7, it doesn't mean that your staff continues to grow and things like so. Like that's where I think it gets a little tricky. And
Hmm.
sometimes people, I can see it from supply standpoint. People throw, well, I'm at 2.5%. Well, but you're doing $2 million a year. So that's a pretty big swing. And so I would say be very cautious about the percentages, but relatively to the size of the practice as well. So I think that
Yeah.
matters. But I mean, it's a lot of fun when you grow. Like your fixed cost is fixed cost.
I talked with a doctor earlier that's a general practice doctor in California of all places, which has, generally speaking, the highest wages, the highest supplies, the highest rents, and everything. 11 chairs, real big practice, was doing like 3.3 million in collections. And we were talking about his overhead and how, and how, how he's done such a great job managing his team member costs and his facility costs in a third party, externally leased space, and so on and so forth. And so there's certain things that, when you add more chairs, you add more hours, you add more providers, certain things don't change, right? You're not necessarily going to spend more in advertising. Your rent's not going to go up. You don't need to add another front office person because you have a specialist coming into your office once a month or once a week or whatever it may be. So there's different ways that you can maximize your current space, your current office, that also adds dollars to your bottom line as well.
Yep. Awesome. All right. Any more questions, everybody? So I know we still have people here. Hopefully everybody got a chance to download. So One of our QR codes is giving you access to our free trial. So just make sure to use the ZenFan promotion code to get a 30-day free trial. Another promo code that I have, not the promo code, another QR code that I have is basically allows you to download all of our resources. One of the big ones is the ultimate guide or inventory control. So anything related to setting up the budget, setting up the physical inventory, putting up the tip up bins and things like that, you'll be able to see with the links and where to purchase and all that stuff specifically from that QR code. And then Drew, what's your QR code? Where it's going to lead people to?
Mine is just if anybody wants to schedule a consult to talk through their numbers, talk through their game plan, I'm more than happy to talk with anybody about their practice. Like I said earlier, I had a conversation with the doc. It was 6:45 in the morning in California, and we had a conversation about his practice and where he's going and what he'd like to see. More than happy to do that with anybody. So mine's just to schedule directly with me if you'd like to have a conversation about your situation.
Fantastic. And so I'm going to put up emails again. So if you guys have questions, please feel free to email Drew or myself if you have more questions. And hopefully, Drew, like I would like to do another maybe part 2 at some point next year where we can dive into the numbers. So I think it would be really interesting if we can take a P&L of an office, hide the names and things like that, and just go through and see what do you typically see, what are the red flags and things like that. So maybe we can do another webinar. And if you guys are still here and listening, if you would like that webinar, put a thumbs up or a plus so that we know that there's some interest in the audience. Because a lot of times I do want to get more specifically more in the weeds of how does it work? How does the P&L work? How do you look at it? How does somebody else would look at it? So yeah, we got lots of thumbs up. So
Yeah,
Drew, we got work
absolutely
to
happy
do.
to.
Yep. And
Happy to help in any way I can.
yeah, and so at that point, I would pretty much just structure around just looking at the P&L and goals and related to where people at and where they should be for that particular category. All right,
Yeah, that
so
sounds great.
that's the webinar, everybody. I hope you guys enjoyed it, and then we brought the value. So all of the recordings will be available. The handouts are available, and we will send that out right after the webinar is over. We'll send an email with the recording. So thanks everybody for attending, and Drew, thanks for being a co-host. It was a lot of fun doing
My
it with you.
pleasure. Yeah, my pleasure.
Thank
Thanks
you.
for your time, Tiger. Always good to see you.
Thanks everybody.
Bye-bye.